what are the different mortgage options out there. Get it, you're looking to buy a house, but you want to understand which mortgage option is going to be best for you. Well, I put this video together to help you understand the different mortgage options out there, and then you can decide what would work best for you. Or you can call your boy, or email your boy, or DM your boy, and we can go over and hash out what probably work best for you. Yo, so what's going on, guys? My name is Alex Hayden. I'm a local real estate agent operating out of Irvine, California, throughout Orange County. I even operate throughout all of Southern California. I even operate in San Diego, as well as having clients in Ventura County. So if you ever have questions about buying a house, selling a house, please feel free to email me. All of my contact information is in the description below. So without further ado, let's get it. All right, so today I'm gonna go over 4 different loan types that there are out there, and then hopefully that helps guide you, that will help guide you to understand which one is the best one for you to use. Number 1, you have your conventional loan. Now, your conventional loan is basically the most common loan. It's known as a conforming loan because it conforms to the guidelines set by Fannie Mae and Freddie Mac. Now, basically, Fannie Mae and Freddie Mac, they're 2 government enterprises, and they purchase mortgages and they sell them to investors, right? There's no need to get in the weeds and to the nitty gritty with that. Typically, what you'll see with a conventional loan is 20% down. You normally have to have a higher, credit score. The guidelines and the qualification standards are a lot higher with a conventional loan. Typically, your DTI should not exceed anywhere over 43%. However, talk to your local lender or whoever you're working with as a lender, because they'll give you more details on where your DTI should and shouldn't be. Another thing about the conventional loans is there's typically 2 products that people go with, either an adjustable rate mortgage or a fixed interest rate. Now, adjustable rate mortgage is quite literally exactly what it sounds like. Basically, your interest rate fluctuates and it matches and keeps up with the market. Your interest rate that is fixed, however, that is gonna be solid, flat interest rate, is gonna remain that way until you refinance your property or you sell your house and you decide to get another one. But your fixed rate interest rate is also exactly how it sounds. It's fixed rate, it ain't going nowhere. The second loan available to you is gonna be the FHA loan. Now, a lot of people love the FHA loan, particularly because you only have to bring 3.5% down. Now, with this 3.5%, you also have to take into consideration PMI. PMI, if you haven't seen my other videos, is private mortgage insurance. Basically, because the FHA loan is a government-backed loan, they are basically insuring your home and insuring to the bank, saying, hey, if they default on the house, then we will cover whatever the price of the house that is owed to you. Whatever the buyer owes you, we will cover that. So you are paying the $200, $300, $150, whatever it may be. You're paying a few $100 every single month to ensure that the government will actually take on your loan. Another great thing about the FHA loan, typically your DTI can be higher than that of a conventional loan, and your credit score requirement also does not have to be as high. It can actually be lower and you can still be qualified. Now, with all of these loans, you still will have to have solid job history, typically the past 2 years, in order to qualify for these loans. But the guidelines that are set for the FHA standard is significantly lower than that of your conventional loan. So what's going on, guys? Before we continue with the video, I have to plug this in. Remember, like the video, subscribe to the YouTube channel, share the video if you feel like it's valuable and that anyone else can use this content, so that I can help as many people as I possibly can in the real estate market. All right, now I'm shutting up. Let's get back to the video. The third loan, which is my favorite loan, is gonna be your VA home loan. Now, the VA home loan is great because as a veteran or an active duty military member, you have the ability to buy a house with no money down. And another great thing about this, especially in today's market, is we're seeing sellers offer credits. We're seeing sellers offer concessions to buyers in order for the sellers to offload their property. So what does that mean for you as a buyer with the VA home loan? This quite literally means you have the possibility of moving into your house with no money out of pocket, with the exception of getting an inspection done. But aside from that, you are moving into your house with no money down, period. if you are a VA home buyer, especially in 2023's home buyer market. The fourth loan that I want to cover in today's video is going to be jumbo loans. Now, jumbo loans fall right outside of your conventional loans or your conforming loan limits. The conforming loan limit maximum is $1,089,300. So jumbo loans are going to be anything over that. Now, jumbo loans typically come with higher interest rates, and they also come with way more strict qualification standards, simply because this falls outside of the conforming loan limits, which means there's no government-backed entity that can back these loans. So they're seen as significantly riskier to lenders. Now, where do jumbo home loans typically apply? They typically apply to real estate markets and houses specifically that are in expensive areas. If you live in an expensive area, like my area, for example, which is Irvine, California, a lot of the loans that are going to be written in this area, because the median price sold for a home out here is $1.32 million, then a lot of these homes are going to be jumbo loans. And because they fall out of the conforming loan limit, that, again, piggybacking off of what I recently said, they're seen as riskier to lenders. And so the guidelines are going to be a lot tighter for jumbo home loans. All right, there you have it. I gave you 4 different home loan products that you should be aware of when you're thinking about buying a house. You have your conventional home loan, number 1. Number 2, you have your FHA. The 3rd is the VA home loan. And the 4th are jumbo loans. So do with this information as you will. Please like, subscribe to the channel, share the video if you found any value in this, or if you know anyone who also found value in this, share it with them, let them know. Subscribe to the channel. Your boy's dropping multiple videos every single week. For the rest of my life, it is what it is. All right, that being said, catch y'all on the next one.